Hi, my name is Jay Abalafi. I'm the founder of Lion Financial Planning. Today, I want to show you one way in which you can track progress to your financial plan. And one way to do that is to take a look at what the plan projected your accounts and assets would be in the future and compare those values to what they actually are in real life. Okay, so here is a net worth chart that I often present to you as part of your financial plan. This is just simply tracking the value of your assets over time. Okay, and here's the tabular version of that data. So this hypothetical plan was delivered in 2020. And we're going to take a look at your regular assets. These are your non-retirement accounts, so things like cash, brokerage, investment accounts, etc. And this plan, again delivered in 2020, projected that the regular assets would grow over time, and that, for example, in 2022, those assets would be worth about $131,000. So you might say, hey, it's 2022, it's the end of the year. I want to compare, I want to track progress to the plan. I'm going to take a look at what my regular assets, the value of my regular assets are, and compare it to my plan. I'm going to compare it to $131,000. I'd say you're close, but we have to take into account one thing, and that is inflation. Okay, so first and foremost, every dollar that I show you as part of your financial plan is in inflation adjusted or quote real dollars. That is, every dollar that's shown to you on this table and all the cash flows and everything that I show in your financial plan is going to be in dollars of, for this plan, which was delivered in 2020, would be in dollars of 2020. Okay, so every dollar in the future, including those in 2022, this $131,000, this is in dollars of 2020. It's not in dollars of 2022. Why would I do that? This is because, so first off, inflation is all about the idea that a dollar today is worth more than a dollar tomorrow, because if we expect that prices are going to be increasing, the purchasing power of that dollar is falling over time, right? A dollar can buy me a lot more today than a dollar in the future if prices have increased. Okay, so what that means is that well, first and foremost, we care just about the purchasing power of our money, but it means I kind of have very little idea of what a dollar is worth in the future, but I have a good sense of its purchasing power today. So that's why in your plan I show you everything in inflation adjusted dollars. However, when you now go and track progress to your plan, you have to be aware and essentially make adjustments for inflation by taking the projected values from your plan and actually inflating them or increasing them by the actual historical rate of inflation between 2020, the year in which the plan was delivered, and the year in which you're currently in, or the year in which you're comparing the asset values to. Okay, so don't just compare your end of year account balances to the numbers on the charts. We want to make one adjustment for inflation, and this becomes more and more important the further you are away from the date in which the plan was delivered. Okay, there's one really simple way to do that, and that is just to use a basically time value of money calculator or an inflation calculator. Okay, so 131,073. And I've already put it in here, but here's a simple free one online, usinflationcalculator.com. Again, there's a variety of these things. Again, what we want to do is we want to know what is $131,073 worth in dollars of 2022 rather than in dollars of 2020. Okay, because again, the plan projected, hey, at the end of 2022, your regular assets are going to be worth $131,000 in 2020 dollars. So we want to basically adjust that number for the rate of inflation between 2020 and 2022 so we can make an actual comparison. I've already put the numbers in here, but you would just put in 2022, you hit calculate, and so the calculator shows you that $131,000 in dollars of 2020 is actually worth $145,604 in dollars of 2022. So in practice, when I'm comparing numbers, values of assets and accounts, today, let's say in 2022, to a plan that was done in the past and had projections of what those account balances could be, I have to make an adjustment for inflation. So what I would be doing is comparing my account balances today to the 145,604, not to the 131. I hope this is helpful. Have a wonderful day.